why we're not seeing the typical unhappiness we see in Asian FX when oil starts to move to these levels?
I think it might just be a matter of time because, oil prices tend to affect the trade balances with maybe like 2-3 months lag. In some sense, I think we will only see more pain in some of the trade deficit currencies. For example, India has already reported a 24 billion deficit for August, and that was when oil prices were not even this high.
And you also raised your dollar forecast. I mean, what was driving and what's behind that call?
I mean, we said that the king dollar is back. In some sense, it never left Asia. It's been under the oppressiveness for the all year round, but king dollar is back for European currencies, right? So now that European currencies, the European central banks are more or less done with rate hikes, we think that it's time for the markets to think about rate cuts for these currencies, which will undermine them.
So, Joey, where does that, if the dot plot changes, and as I was saying earlier, and we don't see any more rate hikes being pressed, does the dollar take a pasting? But if it doesn't, and it is king dollar, does it still continue to lord it over sterling and the euro in particular?
Frankly speaking, we think that the amount of rate hikes left in all these central banks across the world is just minimal. So at this point, it's about how much rate cuts are being priced in. And the Fed's dot plot is still showing 100 basis points for next year. That's probably too much, right, given where growth and inflation is for the U.S.
What do you think the dots are going to show?
I mean, if they show less rate cuts projected for next year, actually the dollar might get a boost from that. In some sense, the market is already there, right? If you look at the futures rate pricing, it's only about 80 basis points.
Yeah.
Okay, and what does this mean for the BOJ then, right? I mean, it seems like they're very focused on levels of the yen. Are we likely to see, just given the confusion that we've seen the last week or so on NERP and all that, is this meeting going to do anything for yen on Friday?
Frankly speaking, we think that the dollar yen is still going to be roughly sideways. I mean, I think 150 around that level will be protected or defended by the MOF. But in terms of Bank of Japan, we don't really see any action until, say, early next year or the next fiscal year even. Yeah.
So, I mean, is the Bank of Japan then really going to be concentrating on the yen when it looks at what they can do with, as David put it earlier, NERP or YCC, in other words?
I think in the near term, what they can do is actually more on the grey zone for where 10-year JGBs can move, 0.5 to 1%. So maybe they can allow 10-year JGBs to creep higher.
But that could be the creep, couldn't it? I mean, when he became governor at the beginning of April, it was what I think JGBs were yielding 10-year about 0.4%. We're looking at 0.7%. Now, that's a huge move relative.
So in some sense, he has already achieved that creep. So we might just continue creeping higher until, you get to a stage whereby another policy change is needed. But that could be, early next year.
Would you still recommend funding the yen as a funding currency?
I think, as with yen as well as RMB and some of the other low-yielding currencies, they are very low-yielding, so there is all that attraction. However, they also face a lot of intervention risks, so you got to bear that in mind, right? The intervention risk can come quite suddenly and can be quite volatile for these currencies.
Do you think the PBOC then has been winning in this fight in some ways? I mean,
they must be praying for the BOJ to do something as well.
For the PBOC, it's a real tug of war, right? And it's PBOC on one side, and there are many opponents on the other side. So you gain an inch and you lose an inch. It's really quite a struggle for them. Like for example, last week we saw them gaining some ground, but this week they seem to be losing it again.
Yeah, there seems to be a funding squeeze here in Hong Kong with rising CNH rates, for example. I look at your forecast. You look, is that correct that you expect strength from here in the Chinese currency?
Well, we expect stabilization, roughly 730 plus minus, and then a little bit of recovery in a more sustainable way in 2024, assuming Fed cuts rates as well as China's economy manages to sort of recover from all this drip feed of policy stimulus we've been seeing so far.
Well, okay, if China turns, what looks cheap?
If China turns, what looks cheap, I think
Aussie won.
Aussie for sure, Korean won, Taiwan dollar as well. I think Korean won and Taiwan dollar, they actually might have the additional benefit of not just benefiting from RMB stabilization, but also from the AI theme and this electronics potential recovery. Because we've been in this electronics doldrums for close to a year or maybe even 18 months if you measure by some extent, and it's been a long time for a cycle.